So this is the silver structure. There is a base channel, there is an acceleration channel, then the prices come down and they deaccelerate and then they move up. So this also is a reason why we believe that precious metals or commodities per se could have some multi-week retracement and maybe multi-month retracement also. And if our banner cycle, if you were there when we were speaking about the banner cycle, that there is a possibility of an 8-year upcycle after 2011 or from 2011, then we are speaking about a uh, um, larger leg of prosperity still pending, which could also mean that commodity prices could come down because commodity going up is more about anti-prosperity or more about inflationary and more about people moving to hard assets from cash assets. So this is the silver structure. Then I have other structures here. This is a very interesting structure. This is the gold structure. Now, Fibonacci is not just about Fibonacci retracements. Fibonacci retracement where you say till where the trend can fall. Fibonacci is also about proportion between legs. So here I have drawn a proportion between the leg from 1976 to 1980 high, and I've drawn the proportion. That proportion I've extended to 2000 low till 2010 high. So if you as you can see that the gold has reached 161.8 times the size that the gold moved in 1976 to 1980. Now this again is um, a very strong resistance point. You know, gold can keep going up, but again, nothing can really go up. You know, I strongly recommend you should read um, The Power of Gold, which is a book by Peter Bernstein, who who showcases uh, uh, the main history of gold, how the love and hate relationship with gold, how silver at some point of time was important, how gold was considered important in Europe, but it was more considered as a consumption item because in Europe gold was considered as something to be spent to buy spices and silk from India. So like Europe was always in a consumption. They had a consumption character, and this is I'm speaking about 1600s also, and it was only later at a certain stage that gold as an international asset. But Asia was generally always hoarding gold. They were always storing gold, and these are very strange thing. But even now, if you see 80% of consumption of gold is in India, and it's very strange. I don't know what they do with such gold. My mom forced me to wear a gold ring with some stone, which is supposed to be bring good luck, and this is the whole Indian mindset of value in gold. So this is all the generational character. But again, the book talks about how it led to boom and bust. It talked about how gold's aura faded, and gold also dropped in value. And if you read about the gold 30-year cycles, we also spoke about 30-year cycle, which again suggests that after 2017 gold may also collapse. And so this is a proportion which is talking about a possible smaller retracement or a multi-month retracement from here, which is basically done on a proportional level from 1976 to 1980 and from now on. And according to this gold structure, and now I could also count this structure and I could put 1 2 3 3 3 4 5, but I've not done it here. But again, I've still drawn the a channel, and this again is a logarithmic channel. But and as you can see that the inclination of the prices are continuing to increase, and as it will continue to increase, gold will become more vulnerable to a crash. So at this point of time, our view is that gold should retrace, and here I've drawn the Fibonacci proportions on gold. This again is an Indian example where I've I've drawn some Fibonacci retracement, and what I've done here is I've inverted the chart. This is the BSC, Bombay Stock Exchange, power sector, which is linked with with electricity and all. And according to this, the 38.2 retracement has not really broken, and because of which there is still a possibility that this sector might still have further might be ready for a change of trend, because it is trying to go up, it's trying to go up, but it does not go up. This is an inverted chart, so it is trying to fall, but it does not fall, and when I've inverted it, then it looks like it is trying to go up, but it is fails to go up, and that is why it is ready for a change of trend. These again are the intraday work that we do. Here we have counted internal waves, and which also suggests that maybe the smaller five leg structures are over, and now we are speaking about a bounce back here, which should take it a bit higher. So smaller degree count, intraday counting, 1 minute count, 5 minute count can be done. This is the euro dollar structure here, which again is drawn from the 1.19 price structure, and 1.19, it has gone up. It has gone up not in a five-legged structure, it has gone up in a three-legged structure. When it has, and as you can see, it fell in a seemingly five-legged structure. It fell from uh, January 2010 in a five-legged structure. It moved up in June to October, November in a three-legged structure, and now it could be moving down in a five-legged structure. And if it is moving down in a five-legged structure, then it is going to go to 1.2 and lower. This is how we start to mix. Now we start to mix things. One side we have done Elliott, other side we have done Reiki. So if you were there on the first performance cycles update that I made, we talked about Reiki, which is the performance cycle, which means that if the performance cycle is top, the stock has already best performed, and it has top performed, and it is ready to underperform. And when the cycle is at the bottom, the cycle I have depicted with the blue dashed line, and the first top left chart is with sugar, the black line is sugar prices, and the blue line is the performance cycle of the Reiki that we have drawn. And now the Reiki for sugar is coming from the top. Sugar was at the top of 500 assets. It was one of the best performers of 500 assets, and that was the time its cycle of the performance started to turn down. And now, along with this, on the right hand side, I put the Elliott count, which again shows a chart from 1960. From 1960 I've drawn the structure, and it again shows me from September 99 a possibility of a five-leg structure. So if it is a five-legged structure, there could be some drop in the five-legged structure, and you can clearly see how the inclination is increasing, how the slope is increasing. First, there was a on starting from the B wave low, it was September 99, it moved up a little bit. It did not really move up. Then it started to trend. From large investors came large speculators. From large speculators came everybody. And that's when sugar continuously pushed higher. So these are the Elliott wave structures, which are really not that difficult to understand. It is more a kind of it's a kind of a bit of practice. It is only believed to be very complex. Elliott wave is a very simple visual tool. It's not very tough, and people and traders who are watching markets and prices every day, they can start seeing Elliott wave in a matter of minutes. In minutes, you can start seeing 1, 2, 3, 4, 5, and here it is the strongest wave, or here is the weakest wave. So you can see these things in if you are sitting in front of a price chart. And then the lower one is coffee, where I've drawn the five wave structure on coffee, and I've shown that how the performance cycles, the blue one, are falling. which also indicate that maybe coffee could also retrace. If the five-wave structures are complete, then coffee could really fall for good. I know some big coffee shops that have closed down, and there was such a rush of starting shops for coffee, and like Turabo in Cluj closed down because the rent was too high, and maybe the price of coffee went up, and I don't know what was the reason, but there is the social mood has definitely a lot to do with the price structure. So if coffee prices are going up, then of course there is some social mood. We are looking for to be energized, or we are maybe excitement, or some speculative element. There is of course a sentiment element linked with the with Zahar prices, which we already have talked about prior, where we said that Zahar consumption is increases in a negative market, because people do not really care about being fit, but sugar falls in a bullish market because people want to be fit. So this again is a kind of guideline, which is a psychological or a social mood kind of guideline, which may or may not work. This again are some system that we have made, which we call the long only, short only systems, which try to capture the trend. When the trend is up, we have a blue box, and when the trend turns down for good, or it starts to reverse for multiple week, the not only the blue box closes, but also the orange box starts, which is a kind of sell sign. Now again, the prices have fallen in a five-way structure. The moment prices started to fall, we know that the trending system has closed down. So we mix trending system with Elliott. We use a combination of tools. We do not use just one tool. The performance cycles we talked about in our first session, which was that we rank assets, and the ranking with the bars suggested that Transgas was the best, and Transgas, when it was moving up and it was the best, it was also making a clear channel price structure. It was continuously going up, 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 straight up, up, and now Transgas is the best. If Transgas is the best, then for us at Orpheus, if something which has already become the best in 54 assets, it is time for it to underperform. So Transgas for us should underperform. I think that we made a large case, and I think that Neil is here. He must uh, uh, must recollect our call on Transgas. So the whole idea is that we can anticipate when a trend has to start, and that anticipation can be done with a basic channeling at the bottom. Then we can also do the see the slope of the price structure. When the slope becomes too much, then we know that the prices are ending a trend. Whether it's a trend for a small degree or a large degree, it depends on what trend you are watching. Now, according to us, the trending system with the blue and the orange boxes has closed, and according to us, the Transgas should be completing its final structure and should retrace um, the 30%, 50%, 60% from the of this leg up. This again is a bet-free structure. Now, this is an more of an alternate scenario. We in Elliott where we draw multiple scenarios, or we try to have two big scenarios. One is a preferred scenario, which is a high chance scenario, and other is a backup scenario, which may be a lower chance scenario. Now, this is a lower chance scenario for me. Now, I'll try to explain you why. The March 2009 markets moved up from Optimi, and they went up till 13 de mi. Now, if you look at the price structure from March 2009 to